Today, we are opening up the case file on one of the most vital skills in all of commercial lending: how to really understand and assess credit risk. We're going to give you a detective's guide, a real toolkit for making solid lending decisions. So, let's start the investigation.
So just imagine this for a second. You're sitting there, you're about to approve a new commercial loan. All the paperwork is right in front of you, the deal looks good. In that moment, with all that data and all those details, what's the one question that truly matters more than anything else?
That's it. It really is that simple and that serious. Every single thing you do, every analysis, every document you review, every conversation you have, it's all about answering this one fundamental question. This is the absolute heart of lending.
And this whole challenge, it has a name, of course: credit risk. This is the central risk we manage as lenders. Look, our job isn't to somehow avoid all risk. That's impossible. It's to understand it, to measure it, and then to make a smart call on whether the reward is worth it.
So, how do we actually find the answer to that big question? Well, like any good detective, you need a system, a reliable framework for your investigation. And that's exactly what we're going to build right here, right now.
Here it is, your investigative toolkit, the 5 C's of credit analysis. Now, this is way more than a checklist. Think of it as a step-by-step process for getting to the truth about a borrower's real creditworthiness. Let's dive in and start with the first clue. Okay, first up is capital. This is basically the borrower's financial foundation. You know, how much skin they have in the game. It's their own money on the line, and it tells you a lot about their overall financial position. Now, to really assess capital, you have to dig way deeper than just a single number on a balance sheet. You got to start asking questions that tell a story. Like, what's the quality of those assets? Are their debts due tomorrow or 10 years from now? And hey, does the way they've built up their net worth even make sense for their situation? This is where the real detective work begins. Let's move on to our second clue, which is capacity. If capital is the foundation, then you can think of capacity as the engine. It's the borrower's actual, proven ability to generate enough cash to make their loan payments on time, every single time.
And listen, capacity can't just be based on a hunch or a promise. It has to be rooted in hard evidence. This is where we put on our financial detective hats, and we comb through tax returns, cash flow statements, all of it, to find solid proof of their ability to repay.
Now we get to our third clue. And folks, this is a big one: character. This is where we move beyond the spreadsheets and into the human element. We're talking about their track record, their reputation, their integrity. It all boils down to their fundamental willingness to pay their debts. And the difference is usually night and day. Good character, that shows up as stability, being upfront with information, a history of doing the right thing. Poor character, on the other hand, it leaves a trail of red flags. They might be evasive, have questionable business partners, or just a bad reputation around town. These are the details you're looking for.
I really want to pause on this for a second because this is so incredibly important. I mean, it cannot be overemphasized. No amount of money or assets can make up for a person who is unwilling to pay you back. It is the ultimate deal breaker, period. All right, our fourth clue zooms us out a little bit. We're now looking at conditions. This is the environment the borrower is operating in. Because let's be real, no business exists in a bubble. We have to understand the larger forces that are shaping their world.
And here, we have to separate things into 2 buckets. You've got external conditions, stuff like the economy, new regulations, things the borrower can't really control but has to deal with. Then you have internal conditions, like being dependent on just one big customer. That's a risk specific to their business, and it's something they should have some control over.
And that brings us to our 5th and final clue: collateral. This is the asset, like a building or some equipment, that a borrower pledges as a backup plan. It's our secondary source of repayment if things really go south. It's our safety net.
But, and this is a huge but, here's another golden rule every great lender knows by heart: security is no substitute for repayment ability. Collateral is only ever a fallback. It is never, ever the main reason you approve a loan.
And that leads to a really simple test. We must lend expecting to be paid back from the borrower's actual business operations, not from selling off their assets. If you ever catch yourself thinking, Well, this loan only works if we sell the collateral. That's a giant red flag telling you it's a bad deal from the get-go.
Okay, so we've run through all 5 clues: capital, capacity, character, conditions, and collateral. They're all pieces of the puzzle for sure. But if you had to pick just one, which one do you think is the most critical piece of evidence in your entire investigation?
Yep, it's character. Think about it. A borrower could have all the money and cash flow in the world, but if their character is poor, they might still try to find a way not to pay you. But a borrower with amazing character, they'll move heaven and earth to make good on their word, even when things get tough.
So, now that we've got our framework down, let's circle back to one of those clues, conditions, but look at it from a more strategic angle. A good detective doesn't just see the environment. They ask how the suspect is actively managing the risks within it. This right here is what risk management actually looks like. It's not enough to just say, oh, they depend on one supplier. The crucial follow-up question is, okay, so what's your plan to deal with that? A well-run business will have a solid answer, like, we're already in talks with 3 other suppliers. That's what you want to hear.
All right, let's bring it all home. We've gathered all the clues, we've analyzed the environment. Now it's time to put all the pieces together and really start thinking like a seasoned lender. These are your golden rules, your key takeaways. If you remember nothing else, remember these 5 things. Character is king. Repayment ability always comes before security. You have to understand the context, match the loan term to what it's for, and always, always use the 5 C's. This framework will be your guide on every single case you ever handle.
So, we've given you the detective's toolkit. The principles are solid, the framework is ready to go. The only question left is the one you have to answer for yourself. On your very next case, where does your investigation begin? Thanks for joining us.